Hi, this is Sheldon here from the Currency Advisory Desk with today's report. Well, we concluded yet another week with strong US numbers. Now, the non-farm employment change and unemployment rate both came in positive at 236,000 and 7.7% respectively. We've seen that the US unemployment rate has been coming down steadily, and this is a very major sign for the economy recovering. And as we know that the Fed easing target has now been tied to the inflation, to the unemployment rate. So we expect that there will be more reduction in unemployment, and this will in turn be positive for the US economy, that is. Now we have an action-packed week ahead of us, both in terms of international as well as domestic data. On the domestic front, we have the industrial production and inflation data, which will serve as a precursor to the main event, which is the RBI policy meet to be held on 19th of March. Now we have the Indian trade balance data due today. However, we do not foresee a lasting trend developing in the markets on the basis of this figure. So even if there is a major gap down, or if you could say there's a major improvement in the trade balance figure, we don't see whatever trend that may emerge out of this particular data, we don't see it continuing for a very long time post this data release. Now the US dollar rupee closed at 54.29 on Friday. We expect the Indian rupee to weaken against the US dollar on the back of the same reasons which are strengthening the US dollar against the major forex majors. Now, traders can go long in the dollar rupee pair at around 54.35 levels in the spot. Now, the euro is back to its lows of 1.30 against the US dollar after hitting a high of 1.3134 due to the statements issued by Mr. Draghi. Now, the markets seem to have called his bluff, and the euro hit a low of 1.2956 against the dollar. Now we fail to understand the reason for markets to react every time there's a statement from Mario Draghi, as until and unless the ECB takes some concrete action of further easing, no amount of rosy talk can pull the Eurozone out of its present crisis. Because that's what's been happening. Every time Mario Draghi comes on screen and he says something, and we see the euro reacting for a day or two, and then it's back to its lows again. We have the French industrial production and German trade balance figures, which will be closely watched today. Now we are bearish on the euro-dollar pair and the euro-rupee pair also. Traders can go short in the rupee pair at around 71 levels against the euro. Looking at the pound, well, the pound is trading lower at 1.4921 against the US dollar. As per our expectations, the Bank of England did not go in for any further quantitative easing last week, even though we had a flood of analysts who were predicting a £25 billion increase in fresh funds by the central bank. Now the pound looks weak against the dollar. The next important support is at 1.4850. In rupee terms, the pound can be short sold at around 81.50 levels. Now the yen dollar weakened considerably on the back of strong US numbers. It is now trading comfortably at 96.14 against the dollar. The yen has a very strong resistance at around 96.25 levels against the dollar. We've seen it hit this particular level at least 2 or 3 times in the last week. Now if it breaks this resistance, then we can see it touch lows of around 97 to 98 against the US dollar. The trend against the Indian rupee is also weak, and we advise our traders to go short at around 56.75 levels in the yen rupee pair. Well, that's it from the Currency Advisory Desk. Thank you.